Hello students, welcome. So here I have taken one question from profit prior to incorporation. So this is a 10 marks question which will come for your examination. So here in this question we are going to prepare a statement of profit and loss account. Once again, this is 10 marks question from the profit prior to incorporation. This is compulsory question. Okay, if you learn this, the 10 marks will be in your pocket. So in order to solve this problem, we need to do two things. First thing, we need to calculate time ratio, then we need to calculate sales ratio, and then we should go for preparation of statement of profit and loss account. Before that, I'll just read out the question, explain, and then we'll begin with the solution. So what is the question here? Maltese Company Limited was incorporation on 1st April 2016 to take over the business of Akshay Company Limited as from 1/1/2016. The statement of profit and loss account of a company for the year ending 31st December 2016 was as follows. Before we go further question, so we are seeing three dates here. We need to calculate time ratio using these three dates. In order to calculate a time ratio, we need to write all three dates in a chronological order. In the chronological order comes with effects for months as well as year. So first we need to calculate that. Then you are seeing some of the items here, some of the expenses and incomes here in the question. We need to divide all these expense and income using either time ratio or sales ratio. So for that we need to calculate time ratio as well as sales ratio, and here they have given some information. This information will help us to calculate sales ratio. So let us begin with calculation of time ratio. I already told you, in order to prepare time ratio, we need to take all the three dates which is given in the question in a chronological order, write all those dates in order wise. So which will come first? All are in first 2016 only. It is a calendar year. You can see 1st January it started and it ends on 31st December. So we'll write 1st January we have, 1st April we have, and 31st December we have. If we see in order wise, the first will come 1st January 2016. This is the date on which a company purchased. And the next date is 1st April 2016, and this is the date where company is legally incorporated, and the closing date of the year 31st December 2016. From purchase date to incorporation date, we call this as prior period. How many months it is? You can easily say it is 4 months, but it is not actually 4 months. How many months it is? From 1st January to 1st April, 1st January to 1st Feb, 1st Feb to 1st March, and 1st March to 1st April. How many months it is? 3 months. So from here to here, it will be obviously 9 months, because a year is a period of 12 months. When we get to know prior period is 3 months, then after period will be obviously 9 months. We'll calculate 3:9 is 1:3 will be our time ratio. Time ratio, why do we need time ratio? Time ratio is needed to divide the expenses which are fixed in nature. You can see some different expenses here. There are certain expenses which are fixed. To divide those expenses, we are going to use time ratio. After the time ratio, the next you need to calculate is sales ratio. In order to calculate sales ratio, you should concentrate on sales for the prior period and sales for the after period. Can you see that information anywhere here? Yes, here it is. In additional information, most of the time the sales will be in additional information only. You can directly see what is the sales and how it is divided by seeing the additional information. See here, sales for the first 3 months. The first 3 months nothing but what? From 1st January to 1st April. This is our first 3 months. Sales for the first 3 months means prior period sales. Prior sales, how much it is? 80,000, and rupees 1,20,000 for the next 9 months. The next 9 months means nothing but what? After incorporation. After incorporation sales is how much? 1,20,000. For 3 months it is 80,000, and for 9 months it is 1,20,000. Using these two values you should calculate a sales ratio. How will you calculate sales ratio? Simplify this. How to simplify? First check how many common zeros are there in the both the side. 4 zeros, 4 zeros. Just remove it and just check how we can divide these two numbers. We can divide these two numbers using 4 table. 4 twos are 8 and 4 threes are 12. 2:3 is your sales ratio. We are going to use sales ratio to divide expenses and incomes which are totally depending on sales. What do you mean by totally depending on sales? These expenses will increase by increase in the sales and these expenses will decrease by decrease in the sales. We can also call it as variable expenses. I repeat again, time ratio we use to divide fixed expenses, sales ratio we use to divide variable expenses, which will change, which will not change with the change in a sales. So moving further, we'll prepare a statement, but before preparing a statement, there are two more adjustments here. Let me explain those adjustments and then we'll go for the statement. So what is the second adjustment? Rent was paid rupees 100 per month. Sometimes this information will be given in the question. If some information given in the adjustment with respect to rent or rates, then the question of working note comes. Otherwise, you can directly divide this rent and rates using time ratio because rent and rates is a fixed expenses. Then when they give some information, there are two things here. You can see rent as well as rate. Rent information they have given, rate we need to divide using time ratio. But we should divide. What is in total? 1800. That 1800 is including rent as well as rate and that we should bifurcate. So we'll do it in the working note. Calculation of rent. Okay. So what they have given? Rent was paid rupees 100 per month. It means per month 100 rupees a rent. We need to divide rent for prior period as well as after period. Rent for prior period. Prior period nothing but prior to incorporation. How many months we have before incorporation? 3 months. From where you'll get to know? You'll get to know this information with the help of time ratio. Prior period is 3 months. 3 months into per month rent is how much? 100. Then 300 rupees is a rent for prior period. Then in the same way, you need to calculate rent for after period. After period is how many months? When you remove 3 months from the 12 months, the remaining months will be obviously 9 months, and even after period also rent is not changed. Sometimes rent will change, but here it is same. 9 into 100 is 900. So therefore total rent is 1200. Why you have taken total rent? There are two things in that, rent and rates. Therefore, now it's time to calculate rates. Rates is equal to total rent and rates minus rent. Yes. Where you'll get total rent and rates? It is given in the question only. What is the value of total rent and rates? 1800 it is. From this 1800, remove this rent which is 1200. Then how much it will come? 600. This you need to divide using time ratio. So now 1200 plus 600, this will be altogether 1800. Hope it is clear. This you need to calculate only when some information is given in the adjustment with respect to rent or rates. If not, you can directly divide 1800 using time ratio. So I repeat again, rent per month is 100. As we have 3 months as a prior period, 100 into 3 is 300, and the after period is 9 months, 9 into 100 is 900. Altogether rent is 1200 and the total rent and rates is 1800. From that total, if you remove 1200 rent, then whatever remain that will be rates, and that you should divide using time ratio. Yes, there is one more adjustment here. Bad debt includes rupees 200 up to 31st March 2016. Normally, bad debt is directly connected to sales. When you get bad debt, when you sell something on credit, there is a chances of getting bad debt. That's why we should divide bad debt always using sales ratio. But when some information is given, you need to follow this information and then divide. That we call it as actual information. So what is the total bad debt? 800. And bad debt include 200 up to 31st March 2016. What do you mean by up to? It means from the beginning. From 1st January to 1st April. 1st April is also same as 31st March 16. There is a gap of 1 day here. So up to 31st March 16. What is the bad debt? Bad debt up to 31st March 16. Nothing but whatever bad debt they have given in the adjustment, that is the bad debt for prior period. Here no need to calculate, they were already given. So prior period bad debt is 200. And what about bad debt? Bad debt after incorporation? Simple, from total just remove prior period bad debt, then you will get after period bad debt. What is the total bad debt? We just now see it as 800. From this 800, if you remove this 3-month bad debt, whatever comes, that will be 600, and that is bad debt after. This is bad debt calculation. This we have to do only when some information is given the adjustment. So now we are done with the working notes. So why you have to do working notes? Because you'll be having separate marks allotted for this working note. Please don't skip and don't do it directly in the statement. So we'll recall what all we have done as a working note. First we have done time ratio. To calculate time ratio, we need to write the dates in a increasing order. Then taking sales values, we should calculate sales ratio. Then rent calculation I have done, because rent and rates both are separate, we have to do it separate things. So in the total 1800, 1200, 600 we divided, and total bad debt we calculated. So this is your working note. Next we'll begin with preparation of statement. So in order to write a statement, how you should prepare a statement? Particulars as it is. In note column, we should write it as base, prior, and then after. Okay. We'll write. First one is, what is it? Continuing operations, then revenue from operation. In the same way, you need to write Roman 1, continuing operations. Why continuing operation? Normally in business there are two types of operation, continuing operations and discontinued operations. So here in this chapter you don't get discontinued operation details, but we'll think only about continued operation. After continued operation, the first point you need to think about is revenue from operations. Revenue from operations. Revenue from operations nothing but sales. Revenue from operations nothing but sales. We already divided, it means they have given after dividing only, that is 80,000 is prior period sales and 1,20,000 is after period sales. Then second point in the question is other income. Students, you can refer the question. Other incomes, sometimes other incomes will be given. Whatever it is, if it is a fixed expense, divide using time ratio. If it is a fluctuating expense, divide using sales ratio. But here nothing, we'll keep it as it is. Now it is the total revenue is 80,000 and 1,20,000. This is total revenue. When expenses comes, then only our work of division using time ratio and sales ratio begins. Now we'll start with expenses. Cost of sales, it means always we should divide using sales ratio. What is our sales ratio? We calculated now in the working note. It is 2:3. And what is the amount of cost of sales? It is 1,30,000. And the ratio is 2:3. 1,30,000 we should divide using calculator. Using time ratio, 1,30,000 into 2 divided by 5. 2/3 portion goes to prior period, 2/5 portion goes to prior period, 3/5 portion goes to after period. 2 divided by 5. How much it will come? 52,000, and after period you don't calculate, just remove this value from the total, you get the remaining. What is the total? 130. 130 minus 52 will be after 78,000. And next, employee benefit cost. Heading is employee benefit cost. In that there are two things, salaries and wages and director fees. We'll write it as first employee benefit cost. What do you mean by employee benefit cost? A cost which is beneficial for employees and expenditure for company. That is why it is called employee benefit cost. What all will come in that? Salary. Salary is a benefit to employee, expenditure to company. That is why salaries and wages. What is the difference between salary and wages? Salaries will be paid monthly and wages will be paid daily. How to divide salaries and wages? Time ratio, because it is fixed. What is the time ratio? 1:3. And what is the amount of salaries and wages? 36,000. 1:3. 36,000. We should divide. Use your calculator. 36,000 into 1 divided by 4. 1:3, right? 1 divided by 4. That will be 9,000, and minus 36,000 is remaining 27,000 will come for after period. This is salaries and wages. And next, one more expenditure in employee benefit cost is director fees. As I already told, director fees will come directly after, because directors will not come before incorporation in a company. We need to appoint the director officially once you incorporate. So that is why no need of dividing that director fees. We'll directly take how much it is, 2,000 after column only. And next, in finance cost. In that finance cost, interest on debenture. Finance cost. In that finance cost, interest on debenture. Even this we will not divide using any ratio, because debentures will not come to company before you incorporate. Once you legally incorporate your company, then only you can issue either shares or debentures. Until you incorporate, you cannot do anything, so it will directly come for after. So how much it is? 3,000. 3,000. And next, depreciation and amortization. Depreciation, is it a fluctuating or fixed? It is not at all fluctuating. It is always fixed. Depreciation, you might be knowing, right? What is depreciation? Depreciation is decrease in the value of fixed asset. Then what is it? What is this one more word? Amortization. This might be a new word for you. Amortization is decrease in the value of intangible asset. For tangible asset we use depreciation. For intangible asset we use amortization. So this we divide using time ratio. What is the amount? 4,000. Divide using time ratio 1:3. Again we'll take calculator. It is 4,000, right? 4,000 into 1 divided by 4. It means 1,000, 3,000. Out of 4,000, if you remove 1,000, it will be 3,000. Now, other expenses. In that other expenses, rent and rates. We already done calculation of rent and rates here. Rent, put it as it is. Rates, divide using time ratio. But we will write it separately. Other expenses. First one, rent. We have no working note. Yes. What is the rent for prior period? 300. What is the rent for after period? 900. What to write? Actual. Either you can write actual ratio or you can write only actual. It is 300 and 900. Then rates. Rates we should divide using time ratio, that is 1 is to 3. What was the rates amount? It was 1800 students. From that 1800, 1200 we considered as rent as per the given information, and the remaining is 600, and that is rates, that you should divide using time ratio 600 into 1 divided by 4. How much? 150. Out of 600, 150 if we consider as prior period rates, then remaining 450 will be after period rates. 150 minus 600, remaining is 400, which we will consider it for after period. Then what else is remaining? Office expense, that is also fixed expense. Will office expense change with change in sales? Never. Office expense is always fixed expenses, nowhere connected to sales. See, fixed expenses means time ratio. One thing you need to remember, students, always whenever fixed expenses come, immediately time ratio should come in your mind. Okay, what is the amount of office expense? It is 12,000. Divide 12,000 using calculator with time ratio. 12,000 into 1 divided by 4. It is 3,000. From 12,000, if you remove 3,000, this 9,000 will be for after period. Then after this, we are left with few more points. Commission on sales. What is the amount of commission on sales? 5,000. On what basis we should divide commission on sales? See, there is a word of sales. It means more you do sales, your commission will be more. Commission on sales, we should always divide using sales ratio. What is your sales ratio? It was 2 is to 3, right? We calculated, no working note, and we already used it. 2 is to 3. 5,000 you should divide using sales ratio 5,000 into 2 divided by 5. 2,000 out of 5,000. If 2,000 comes for prior period, the remaining will be 3,000, that will come for after period. And next, advertisement. What is the amount? 2,000. Advertisement, I already told, advertisement is directly connected to sales. More you advertise, more you can create awareness about your product or a service. When you create more awareness, that will directly increase your sales. That is why advertisement should always divide using time ratio. Don't try to by heart, friends. When you by heart, you will forget. But if you understand, definitely you'll be able to remember. If you solve 2 to 3 questions, there is no need to by heart. Automatically your hand will move on in calculating and dividing the things. So advertisement amount was 2,000. Divide this 2,000 using calculator. 2,000 into 2 divided by 5. It is 800. 800 for prior period. Out of 2,000, if you remove this 800, then it will be 1,200 for after incorporation. Then audit fees. Audit fees, it means whatever transactions you do, you'll be entered, and that will be audited at the end of the year, and that is nowhere connection to sales. That is fixed expenses. When it is fixed expenses, use time ratio 1 is to 3. 4,000 into 1 divided by 4. 1 is to 3, right? Then it is 1,000, and the remaining 3,000 will come for after incorporation. Now, printing and stationery, bad debt. Printing and stationery. Is printing and stationery is connected to sales? No, students. Printing and stationery is fixed expenses. Fixed expenses, again, will use time ratio. Time ratio means fixed expenses. Fixed expenses means time ratio. 1 is to 3. That is 2,400 2400 into 1 divided by 4, 600. Out of 2400, if you remove 600, and that will be 1800 minus 2400. How much it is? 1800. And lastly, we got bad debt. Normally, bad debt we divide using time ratio, but here in this question, they've given some information. It means they made our work easy. They've already divided. The total bad debt was 800. Out of 800 up to March end, it was 200, and the remaining is 600. This is there in the working note. We can refer it. So now I think we are done with division of all the expenses and incomes. Anything is left out? Nothing. So now we have to make a total. See, what is the total here? Loss 3000. We need to concentrate on that. End of the statement, our answer should be 3000 only. What we should do? We should make a total. We already done a total of revenue. Now we need to make a total of expenses. Expenses from where it started? Cost of sales 52,000 plus 9,000 plus 1,000 plus 300 plus 150 plus 3,000 plus 2,000, 800, 1,000, 600 and 200. The total expenses for prior period. Total. Yes, now we have to make a total of expenses. From where we need to start? Please students, don't add it from 80,000 itself. 80,000 is a total we have already done, that is revenue part. We have to make a total from expenses. From third point, we need to start making total. The total of prior period is 70,050. And in the same way, we need to make a total of after period. It is 1,32,950. This is total expenses and we call it as B, and for total revenue we call it as A. Now we have to do A minus B for prior period as well as after period. A minus B. When expense is more, you'll get loss. When income is more, you get a profit. So what is the expense of prior period? 70,050 and income is 80,000. Then obviously income is more. For prior period, you get profit. How much profit you get? 9,950. You can just check it out using your calculator. This is profit. Then for prior period, whatever we get, that we call it as capital profit. For prior period answer, we get capital profit. When revenue is more than expenses, whatever answer you get, that is profit. And what kind of profit it is? Capital profit. Why do we use that word capital? Because still your company is not incorporated. Before incorporation, whatever profit you get, that is called capital profit. Now we do the same thing for after period. What is the total revenue of after period? 120. And the total expense is 1,32,950. See friends, here income is less and expense is more. Whatever you get, that is loss. Loss, you can write it using bracket so that you'll get to know the difference. It is minus, or if you put a bracket, no need to write the minus. 12,950. See, this is revenue loss. If you get a profit, it would have called as revenue profit, or we normally called as net profit, but here it is a loss. That's why 12,950. Together, if you add or deduct, the answer should be equal to the answer what it is given in the question. In the question, what is the answer? It is net loss 3,000. Just check. Did we got 3,000 loss or not? Yes. There is a profit of 9,950. There is a loss of 12,950. The difference is 3,000 loss. So this is a problem of 10 marks. We have done it from the base of all the working note of calculation of time ratio, sales ratio, then rent and rate calculation, bad debt, and we used all these rates, ratios to divide the components which are given in the question. We divided and we got the answer. So if you learn this, The 10 marks will be there in your pocket because this is compulsory question for your examination. Hope you understood. In the further classes, we'll do more number of sums.